talking about the fallout in Asian currencies on the back of that very, very strong dollar. How are you looking at it and the impact on Asian economies, in particular with inflation skyrocketing, given where their currencies are right now?
Thank you very much, Aslinda, for having me. Yes, it's a very unpredictable environment, and all of our clients are kind of thinking about the combination of factors that they're facing. It could be the geopolitical tensions, the movements in FX, the inflation, the increased competing environment, and so on and so forth. And therefore, what I've picked up in some conversation I've had with clients who are participating in the forum from Hong Kong here this morning as well, is that having sufficient liquidity and a well-diversified mix of funding sources is now critical, and could be even as critical and strategic as the next M&A deal that you could be considering. But yes, we're definitely living in a very unpredictable environment, and one that we haven't seen in quite some time.
Unpredictable environment, including that in China. When we spoke to you about a year ago, you said that you're looking at the next 25 years in China, not the next quarter. Since then, we've had the Chinese government taking issue with banker pay. We also have the likes of Credit Suisse reassessing, putting a brake on expansion plans in China. What's your own assessment, and what's your strategy in China now?
So the strategy in China has actually not changed for us. And it was the current strategy was born from decisions that were made actually a few years back. The idea was that we would like to have an important presence onshore because it's the second largest economy in the world. And for us, a bank that has a global footprint in over 100 markets, it makes sense to have a large presence in the second largest economy in the world. So we have been fortunate that we have been granted 100% ownership and control of the FNO, or the future and option entity, and of the security company. We have had a bank, a local incorporated bank now for 15 years. And therefore, we are waiting to reach 100% of our asset management company, which we hope will happen in the near future. Once we will have that, I think we will have strengthened further our onshore platform. And again, that presence is there to help international foreign clients coming into China, or multinational corporations who are there, and it helps serving onshore clients who are, for instance, looking at doing something offshore and with cross-border components and so on and so forth. And you might have seen that recently we got the approval to acquire 10% of China Merchant Bank wealth management company, which again, it's a further statement of our commitment to China again, and competing in China, given that it is the second largest economy in the world.
Filippo, if your strategy in China is intact, are you hiring? What's your headcount plan? Are you also looking at capitalizing the opportunities left behind by the likes of Credit Suisse, which is pulling back?
So I'm not going to comment on what some of our colleagues from other banks are doing. But in terms of headcount, we have the right headcount, and we will hire if necessary and when necessary. In general, to me, the strategy is, as I said, is completing the last piece of the jigsaw and then work on the platform to offer it to the clients. So we are well prepared for that.
Filippo, it's Richard, Hong Kong. Give us a sense, with COVID lockdowns, a slowing economy, where you're seeing opportunities in particular right now. And, it's an operating climate, a landscape which is ever evolving with new headwinds emerging from where there were none, i.e. it's a bit like whack-a-mole.
Yeah, so definitely. In that sense, clearly, in the pure banking environment, you will have seen that there has been a normalization of the M&A market to, let's call it, pre-COVID-19 levels. Deals are becoming somewhat more complex and with cross-border components, which is kind of a little bit of our sweet spot. In terms of equity capital markets, definitely you will have seen that there have been a few IPOs and a few follow-ons on EV batteries, some energy companies, something in consumer, but very little. So there is a little bit of a resurgence of the overall equity private placement, which is a way to sustain company longer before they go public. In general, the growth story, in my opinion, of China and in Asia in general, because our ambition spans the whole region, has not changed, and the need for capital from companies in the region has not changed, and therefore it will come back. But as I said, right now, strategically, having a diversified mix of funding sources is becoming critical. On the DCM market, you will have seen that there is activity on the high grade space and on the ESG agenda, I would say. But overall, there has been a notable slowdown because in a rising rate scenario, clearly investors and issuers are both reassessing their needs and their priorities, and it will take some time before things normalize. Overall, clearly, we also tend to offer to our clients solutions, not only in banking, but also in markets, payments, security services, asset management, and private banking. So we have a full array of products that we are trying to offer to our clients in the world. That's the idea.
Filippo, David here. I wanted to pick up then on your point on DCM, and certainly rising rates, we haven't dealt with this in, 15 years. There was a window about a few weeks back where we thought rates were either stabilizing or falling, and we had that rush of deals coming through in the debt markets to raise some money. I'm just curious whether or not you're seeing that from your clients right now. Is there still this scramble to raise cash, or has that window now passed? A very short-term question, of course.
So right now, I think it seems to me that the window is not there. With most of the central banks going out possibly with 75 basis points during the month of September, I think most of the investors and issuers are realistic around waiting to see what's up. Maybe there could be a little bit of a window in the ECM market, but the flurry of activity we saw in DCM and some deals being printed before the summer, now it's harder.
Filippo, just one final question. Of course, it is still about geopolitics, U.S.-China tensions. How are you assessing the risks of China Inc. delisting from the U.S.?
Look, first of all, the news that we received around 10 days ago of the agreement on the delisting was overall welcomed by all parties involved. And in general, you have clients across the globe that want to access the U.S. capital markets, and we support them in doing so through our efforts. In the specific case of the delisting, our view is it is a little bit too early to call for how things will develop from here. On one side, you have the PCAOB who has to complete the inspection, and therefore only after that we will be able really to assess how things will deploy and whether Chinese companies will go back to list in the US or whether there will be other delistings and so on and so forth.